Hey, welcome back to The Dive. Today on the show, we are so excited to welcome back best-selling author, speculator, the founder of Casey Research, and international man, Doug Casey. Doug loves to travel and has been to over 150 countries to see for himself what's happening around the world. He's joining us today to share his thoughts on meme stocks, FTX, the massive layoffs in the tech sector, the Fed moves for 2023, commodities, an up-and-coming uranium bull market, and of course, gold. Hey, Doug, welcome back to The Dive.
Thanks, Cassandra. It's nice to speak to you. I'm in sunny Punta del Este, Uruguay.
Oh, wow. Well, thank you so much for taking the time to do this while you're on vacation. Let's start off with meme stocks. This week, AMC was at its lowest level since January of 2021. What are your thoughts about meme stocks? Do you think the party's over?
Look, we've had a wonderful bull market in both stocks and bonds. It started 40 years ago in the early 1980s. It's going to take quite a while for it to deflate. There are all kinds of bubbles that have arisen during this gigantic bull market that was largely, not entirely, but largely driven by money printing. So AMC and all the other meme stocks are just a symptom of a bigger problem. At this point, we're in a major long-term bear market as far as I'm concerned, and I don't want anything to do with almost any common stocks, with the exception of mining stocks and oil stocks. So that's the answer to the question.
Now, Doug, we are subscribed to Doug Casey's Take, and you've been covering FTX and Sam Bankman-Fried lately. What do you think FTX's institutional investors were thinking who put money into FTX?
It's a sign that they have way too much money. They've made too much money in the bubble economy, and they were starting to act crazy. Look, when the final bottom comes to this bear market that we're entering upon now, people won't even know the stock market exists anymore. And if you remind them that it exists, they're going to want to kill you. They'll be very angry to be reminded of it. So the fact that sophisticated, intelligent people were throwing money at this moron, well, look, kid that dresses in basketball shorts and a T-shirt, what are these people thinking? It's just the opposite of a bear market bottom, like I said. It's a bull market top. We have a long way to go to the bottom.
According to layoffs.fyi, nearly 1,000 tech companies around the world have laid off more than 150,000 tech workers this year. This includes Meta, Amazon, Lyft, Snap, Stripe, and recently Cisco. What is it telling you when you see thousands of people getting laid off?
You know, there's an old saying in the market. It's high tech, big wreck. And most of these tech companies that people thought they were making hundreds of billions of dollars on have no earnings, have processes that don't work or don't work economically, so that this is to be expected. Tech is the last area that I want anything to do with. And I say that as somebody that was a very early supporter and predictor of, for instance, nanotechnology, for instance, which I still think is going to change the world almost unrecognizably and totally over the next generation. But at the moment, don't want anything to do with tech stocks in particular.
The November U.S. CPI print came in at 7.1%, the biggest decline since April of 2020. Where do you think the Fed is going in 2023?
Well, first of all, let me preface my answer by saying that the Fed shouldn't exist, and in fact, it should be abolished. It serves no useful purpose. money should be a commodity, probably gold, which was the case before 1933. And of course, all relationship between the dollar and gold was severed in 1971. The US Fed and other central banks around the world have created trillions and trillions of new currency units. That's the cause of inflation, solely and exclusively the cause of inflation. But all of these dollars and other currency units that have been created, of course, have jammed retail prices. And that creates its own set of problems. So they can't stop printing money because, like the US government is running a deficit in between $1 and $2 trillion at this point. Where can they get that money? Nowhere but selling the paper to their paper to the central bank. There's one other way they can cool down inflation, and that's the one they're going for, because they can't stop printing money. What they're doing is raising interest rates, which decreases the desire of the productive economy to borrow. And of course, most inflation comes both through the central bank printing money and private commercial banks using the fractional reserve system to create more money. So raising interest rates reduces the amount of borrowing, both by reducing new borrowing and inducing people to pay off old debts. That's what's going on right now. The problem is there's so much debt in the world and so many distortions that have been created that they're running the risk of a catastrophic credit collapse, a deflationary depression. On the other hand, if they don't do that, they run the risk of the dollar and other currencies, frankly, losing all value and retail prices going up at 15, 20, 25%, and then the game's over. They're between a rock and a hard place. You see this print I have in back of me? I'm in my place in Uruguay right now. They painted themselves into a corner, just like those two ducks have. So, here's another one. That's a picture of the same two ducks sitting on a pile of paper money. It's called the death of capitalism. This one's called the death of Marxism. So we're in big trouble, any way you look at it.
There are talks that a recession is inevitable. How are you preparing or taking action given this view?
Well, it's not a recession that I'm worried about. What we're looking at is something that I call the Greater Depression. I call it the Greater Depression because it's going to be much longer lasting, much more serious, and much different than the unpleasantness of 1929 to 1946. What should you do? You should prepare for very rough times. And a lot of jobs that are in industries that are bubble industries are going to be eliminated. A lot of businesses are going to fail. A lot of debts are going to be defaulted on. A lot of stocks are going to collapse. And this is in an environment when commodity prices could go higher. I think what we're likely to see is a panic into real money, not dollars. That's a fiat currency. All the currencies in the world are fiat currencies. They're created out of nothing by central banks. I think the world is going to go back to gold for many reasons we could talk about at length. So the answer to the question is, to preserve capital, I'm buying a lot of gold. I'm buying some silver. Silver is mainly an industrial metal, but has monetary uses. And to speculate, because this will be the age of the speculator, when markets will be going up and down like an elevator with a lunatic at the controls, which is an accurate description of what we're looking at with these central banks. I'm speculating in gold stocks and uranium stocks and oil stocks, energy stocks, natural gas too. That's where I'm concentrated, and I expect to be concentrated in those areas for at least the next couple of years.
Let's talk about uranium. We know that you've been a uranium bull for a long time. How does the setup for uranium today compare to other bull markets, and what makes uranium attractive?
Well, the last bull market in uranium started in 2001, lasted until about 2007. At the start of the bull market, there were 5 or 6 uranium companies in the world. By the end of the bull market, there were about 500, but most of them weren't uranium companies. They were stock promotions that had uranium in their names. Uh, Back then, uranium was $10 a pound, and it cost about 20 to mine a new pound of U3O8. Now, uranium is selling for around $50 a pound, which is about the marginal cost of production for most new mines. The point I'd make is this: is that nuclear is by far the cleanest and the cheapest and the safest form of mass power generation. That's subject for a long discussion, which I'd be happy to go into, but I don't think we have time. But that's my assessment of nuclear power and uranium. Countries which have not been captured by greenest hysteria, which is, say, China, India, and other places in the third world that need and want power, are going to nuclear. In fact, I think that Europe and the US and Japan are going to go back to nuclear in a big way. The bottom line is that we're going to need a lot more uranium. And I suspect that uranium is going to go to $100 or $200 a pound by the time this bull market's over. And a lot of these little uranium companies, explorers, developers, and producers are going to take off and fly. It's a very, very small market. And when a mania takes hold, which I think is likely, it's like trying to put the contents of Hoover Dam through a garden hose. So I have high hopes for uranium stocks.
Okay, so let's talk about some gold. According to the data from 11 Western investment funds, $2.2 billion worth of Russian bullion was removed from their accounts between July and November. Given all the sanctions, how do you think the Russian supply is impacting gold's price action?
Well, the first thing is that you should be very cautious about believing anything that any government says or any central bank says, and especially when there's a war going on, because the first thing to remember about wars is that the first casualty of war is the truth. So I don't really know what the Russians are doing with all their gold, and I'm not sure that anybody else does either. What I do believe is this, however, is that the Russians have found out that it was crazy doing business with the U.S. dollar, buying and selling things, settling things in U.S. dollars, because all those trades go through New York, and they've basically had their assets confiscated. Now, the Chinese and everybody else have watched that and say, you know what? Why are we using the fictitious currency, the fiat currency of a country that's our antagonist, if not our actual enemy? So what's going to happen here is that the world is going to go back to gold because they don't trust the U.S. I mean, the U.S. dollar is a rapidly depreciating asset issued by an untrustworthy entity, U.S. government. So I think what we're going to find is that increasingly countries are going to settle with each other using gold, which they can trust, as opposed to each other's currencies. I mean, the Chinese don't want to accept rubles, and the Russians don't really want to accept yuan. These are all just fiat currencies. The world is going to go back to gold, as unbelievable as that sounds to most people at this point.
So where do you see gold's price action or gold's price in 2023 then?
Well, as we speak right now, at the end of 2022, gold is reasonably priced relative to other things in the world, whether we're talking about a suit of clothes or a meal or whatever. It's about where it, quote unquote, should be, in my opinion. But I think we're going to see panic hit the markets in the future. And people are going to gold, governments and individuals individuals don't even know that gold exists at this point. It's not in anybody's portfolio, whether we're talking about hedge fund managers or Mrs. Buggins in Saskatchewan. None of them know that gold exists. None of them own gold. So I'd expect that at this point, gold is going to go above the reasonable level it is right now to manic levels, driven by fear, driven by panic, because people are going to want to get out of paper assets and get into the only financial asset that's not simultaneously somebody else's liability. And that's a commodity money. That's gold. So I'm very optimistic that 2023 is going to be an excellent year for gold. And I think an even better year for the gold stocks, which are depressed relative to everything, including gold, incidentally.
Before we let you go, I'm sure a lot of our viewers are going to want to hear more from you. So if you could just let our audience know where they could go to find you.
3 alternatives, all of them good, I think. One is my blog, internationalman.com. It's free. We have great articles every day. Second is my podcast, which is a couple times a week, called Doug Casey's Take on YouTube. And third are I urge you to pick up my novels because you can say things in the form of fiction that perhaps you dare not say in the form of nonfiction. And those are Speculator, Drug Lord, and Assassin. And there are 4 more to come, even more radical. They're available from Amazon.
Okay, well, that's all we have for you today, Doug. Thank you so much for coming on. I hope you have a great holiday season, and hopefully we get to talk to you again in the new year.
Well, thank you, Cassandra, and a Merry Christmas and a joyous winter solstice to you as well.
Thank you so much for watching today. We will be back again tomorrow with the latest news, so be sure to stay tuned by hitting that notification bell and subscribing below before you leave us. Bye.